Hey there, market watchers, it's Jim Cramer, your guide to the wild world of Wall Street. Ever wonder why we spend so much time glued to these tickers? It's simple. Knowledge is power. Understanding market trends is like reading the financial tea leaves. It helps us make smart investment decisions and avoid costly mistakes. Whether you're a seasoned pro or just starting out, staying informed is key to success in this game. Remember, the market is a living, breathing entity. It reacts to news, events, and even our collective emotions. By keeping our fingers on the pulse, we can anticipate these shifts and position ourselves for maximum returns. So, buckle up and get ready for another exciting week on Wall Street. Let's dive into the action and see what moved the markets this week. Alright folks, let's break down the big news that rocked the market this week. First up, we had the Federal Reserve's announcement on interest rates. As expected, they decided to hold steady for now, but hinted at a possible hike in the coming months. This sent ripples through the market, as investors weighed the potential impact on borrowing costs and corporate profits. On the economic front, we got some mixed signals. The latest jobs report showed weaker than expected growth, while consumer confidence remained relatively strong. This tug-of-war between positive and negative data created some volatility, with the major indexes ending the week with modest gains. But hey, that's the market for you, always keeping us on our toes. Now for the fun part, let's talk winners. This week the tech sector stole the show with several companies posting impressive gains. Leading the pack was Top Gainer 1, a software company specializing in companies field. Their stock surged over percent after they announced a major new partnership with Partner Company. This deal is a game changer for Top Gainer 1, giving them access to a wider customer base and boosting their revenue potential. Next up we have Top Gainer 2, a semiconductor manufacturer that saw its stock climb percent on the back of strong earnings results. They blew past analysts' expectations, thanks to soaring demand for their chips used in everything from smartphones to electric vehicles. And finally, rounding out our top three is Top Gainer 3, a renewable energy company that's been riding the wave of investor enthusiasm for clean energy solutions. Their stock jumped percent after they secured a lucrative government contract to build a new solar farm. These companies are all riding high on positive news and strong industry trends, making them attractive picks for investors looking for growth opportunities. Now, let's turn our attention to the companies that felt the heat this week. Unfortunately, not everyone can be a winner in the stock market. At the bottom of the barrel, we have Top Loser 1, a retail giant that saw its stock plummet percent after reporting disappointing earnings. They're struggling to compete with online retailers and facing pressure from rising inflation and supply chain disruptions. Ouch! Next up is Top Loser 2, a pharmaceutical company that took a percent hit after their highly anticipated new drug failed to receive FDA approval. This setback is a major blow to their pipeline and will likely impact their earnings for the foreseeable future. And finally, we have Top Loser 3, an airline company that's still grappling with the fallout from the pandemic. Their stock dipped percent as rising fuel costs and travel restrictions continue to weigh on their bottom line. These companies are facing some significant headwinds, making them risky bets for investors in the current market environment. Section 5 Tech Titans take a tumble, a closer look at software stocks. Hold on to your hats, folks, because we're diving deeper into the tech sector. While some tech companies soared this week, others faced a bit of a reality check. Specifically, software stocks experienced a noticeable dip, leaving many investors scratching their heads. What gives? Well, it seems the market might be experiencing a bit of tech fatigue. After a long period of explosive growth, investors are starting to question whether the high valuations of some software companies are justified. Add to that concerns about rising interest rates and potential slowing of economic growth, and you've got a recipe for some profit-taking. However, don't write off the tech sector just yet. This could be a healthy correction, offering a buying opportunity for savvy investors. Remember, the long-term potential of technology remains strong, so keep your eyes peeled for companies with solid fundamentals and innovative products. Section 6. Energy sector shines. Oil prices, fuel stock growth. Now let's shift gears and talk about a sector that's been on fire lately. Energy. Oil prices have been steadily climbing, fueled by a combination of factors, including increased demand as the global economy recovers from the pandemic and geopolitical tensions. This surge in oil prices has been a boon for energy companies, with many seeing their stock prices soar. Exploration and production companies in particular have benefited from the higher prices they can command for their oil and gas. But it's not just the oil giants that are reaping the rewards. Renewable energy companies are also seeing increased interest from investors looking for alternative energy sources. This sector is definitely one to watch in the coming weeks and months as the energy landscape continues to evolve. Section 7. Consumer confidence wavers, retail stocks react. Let's talk about the retail sector, which has been a bit of a mixed bag lately. On one hand, consumer spending remains relatively strong, a positive sign for the economy. However, rising inflation is starting to take a bite out of consumers' wallets, leading some to cut back on discretionary spending. This uncertainty is reflected in the performance of retail stocks, with some companies faring better than others. Companies that cater to higher-income consumers or offer essential goods and services seem to be weathering the storm better than those reliant on discretionary spending. Additionally, online retailers continue to gain market share, putting pressure on traditional brick-and-mortar stores. Keep a close eye on this sector as we head into the holiday shopping season, as it will be a key indicator of consumer sentiment and overall economic health. Alright folks, let's talk about something that's been on everyone's mind lately: interest rates. As I mentioned earlier, the Federal Reserve has hinted at the possibility of raising interest rates in the coming months to combat inflation. So, what does this mean for investors? Well, rising interest rates can impact the stock market in a few ways. First, they can make it more expensive for companies to borrow money, potentially impacting their profitability. Second, higher interest rates can make bonds more attractive to investors seeking income, potentially drawing money away from stocks. However, it's important to remember that the stock market is forward-looking. Much of the anticipated impact of interest rate hikes may already be priced into stock prices. Additionally, a gradual and measured approach to raising rates by the Fed is unlikely to derail the bull market. The key is to stay informed and focus on companies with strong fundamentals and a track record of weathering economic storms. So, what's in store for the market next week? Well, if there's one thing we've learned in this business, it's that predicting the market is like trying to predict the weather. Sometimes you get it right, and sometimes you get soaked. However, there are a few key events and trends to keep an eye on that could influence market direction. First up, we have earnings season in full swing, with several major companies reporting their quarterly results. These reports will give us valuable insights into the health of corporate America and could spark some volatility depending on whether companies meet, exceed, or fall short of analysts' expectations. Additionally, investors will be closely watching economic data releases, such as inflation and employment figures, for further clues about the pace of economic growth and the Fed's next move on interest rates. Remember, knowledge is power, so stay informed and be prepared to adjust your investment strategy accordingly. As we wrap up another exciting week on Wall Street, I want to leave you with this thought. Staying informed about the market is not a spectator sport. It's an active endeavor that requires dedication, research, and a willingness to learn. Whether you're a seasoned pro or just starting out, there's always something new to discover in the ever-evolving world of finance. Make it a habit to read financial news, follow market trends, and research companies before investing. The more you know, the better equipped you'll be to navigate the ups and downs of the market and make informed investment decisions. That's all for this week's market recap. Remember, the stock market is a marathon, not a sprint. There will be ups and downs along the way, but by staying informed, staying focused, and staying invested, you can achieve your financial goals. Until next week, keep your eye on the prize, and remember to buy and sell stocks like you're buying and selling pieces of businesses.